Hey everyone, hope you're having a good day. My name's Andy, channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll be interjecting my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive in there. Let's take a look, see what people are sharing, and I'll share my opinions as we go through it. If you want to follow me, it's at @Finance. And if you want to join our community, finding-value.com, where I dive deeper into all these sectors, all of these individual companies looking for potential investment opportunities, taking an asymmetric approach to investing, looking for those asymmetries in the market. And I use the three pillars to do it: ratios, technical analysis, and market conditions or cycles. So we got North Star here. He says, Silver, hold my beer. This is Silver's 45-year cup and handle nearing completion. We've been watching this. I've been watching this since the mid 2000s, this pattern play out. He says, I'm pretty sure this multi-decade cup and handle hasn't been building for no reason. And then here, he's got some folks were bearish here. Why? Some folks were bearish here. Why? Why are you guys bearish on silver? This thing's ready to go to the moon. And I am fully well taking advantage of this. That's what I'll say there. Very much a lover of silver. Any pattern that looks like this, I love whatever the asset is, unless I don't understand the asset at all, which would include a lot of the crypto stuff. So here's Eric Nuttall. Implosion in the financial demand for oil with net length once again nearing lowest levels in history. All the while, physical oil demand growth is being revised upward. Global oil inventories are at all-time lows. Energy Aspect says CTAs approaching max short. And hedge fund positioning in energy stocks are at 20-year lows. What a setup. Maybe the only thing I can say is maybe the government and or Powell is like going to just throw us in a huge recession to try to kill this setup. It's the only thing I can think of why hedge funds are not over there. But the fundamentals of the sector have never looked better. I agree with that. The only thing is the macro picture, inverted yield curve, potential recession that could come, maybe trumps the fundamentals. That's the only thing I'll say there. But the fundamentals in the sector look really good. Jeff says the Conference Board jobs plentiful gauge has been declining for over 2.5 years, with 22 points lopped off since March 2022. This indicator has been bolting downward. We count 6 bold down moves since the Carter administration. Each coincided with a recession. It's ugly. The Conference Board jobs plentiful. You can see every time we've come down, recession, 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 every single time. And here we are heading lower. Is this going to be a recession? Difficult to say, but most likely. U.S. yield curve has been inverted for 764 days, the longest stretch ever. The difference between the U.S. 10-year and 2-year government bond yields is minus 0.04%, on the brink of turning positive. In the past, each time the yield curve uninverted, the U.S. economy was in a recession. Every time this uninverts, we go into recession. We're right on the cusp of that. So could we go into recession here very soon? We very well could. It is on the table, we're all saying. Kobayashi letter, home insurance prices in the U.S. are absurdly expensive. The average home insurance premium is now $2,191 per year, according to Insurify. It is estimated that by the end of 2024, home insurance in Florida, the most expensive state, will reach $11,759. This builds on a 33% jump in home insurance premiums seen between 2020 and 2023. This is partly why the median monthly home payment is well above a record $3,000 a month in many states. Home ownership has never been more expensive. And you know what's crazy? I kind of look at all of this, and when I was looking to figure out where I want to live, Taxes, insurance, those are all big drivers that form my opinion about some of these states. And if I had to pay 11,759 for um, home insurance, then you've got car insurance, then you've got your property taxes and stuff like that on top of it. And even if you're a renter, you're going to be paying that through rent. It's not like that goes away. And you can see the tornado area here that we also have higher insurance areas throughout here with lots of hail and tornadoes and hurricanes and stuff like that. Hurricanes obviously down here and tornadoes all coming through this area. So when I look at places to live, this would obviously be one of the factors that I would take into account. And one of the cheapest areas that I found is Nevada. They've got low property taxes. They have low home insurance. I didn't look at their car insurance, but I bet you that's pretty low. But they have no state income tax. So that's kind of an interesting area to look at. And it's pretty low compared to even Colorado here. We get a lot of hail where we're at. A lot of storms and hail damage is pretty big here. It has been since I've lived here in Colorado. But yeah. Moving down, investors see CVE, your downstream business sucks. CV to McKenzie, people are saying our downstream business sucks. What should we do? McKenzie to CV, hire people to track and measure key process indicators, KPIs. Create downstream manufacturing performance reporting department. Downstream manufacturing reporting department, perform monthly and quarterly. It's a job opening there. What I find kind of weird there is, wouldn't they know what their business is? We had a bunch of consultants come into the business that I used to work at, and they would tell us stuff like, stuff that we already knew. I'm like, yeah, I already know all this. And it's like management needs to figure out what they want to do. It's not me making the decision to spend a bunch of money to redo something. But most of it, at least for my opinion, is you need to remanufacture, you need to re-engineer your product if you want to automate something. You can't take old designs that are very loosely fit together, built by hand, and try to automate things. You have to change the design. But CVE, I just saw this here, and I don't know why they listen to outside people. I understand listening to investors, but yeah, if you're not making money, then get rid of it or figure out a way to make money from it. Kobayashi letter, new homes are quickly becoming the only option. 33.4% of U.S. single-family houses for sale were new construction in Q1 2024 and second highest on record. Just 4 years ago, only 16% of homes were for sale that were new construction. This share has more than doubled in just 5 years. And you know why it's doubled in 5 years? Because you have a home shortage. Existing homes are not coming on the market. And, I don't understand the viewpoint that if interest rates were lower, you'd get more sellers. Yeah, but those people would also turn into buyers so long that they only hold one home. So if I can't sell my house and live nowhere, if I sell my house, I only own one home. I would have to go buy another one. So I don't see how that helps the situation. This year, in my opinion, is because of a lack of homes in the pool to purchase from. We need more homes in the pool to purchase from. Here's GDX to SPX ratio, and I thought this looked pretty nice. What he has here is he or she still has to take its weekly 150 moving average not showing, though holding its bi-weekly 12 moving average here. So what I see here in the chart is an inverted shoulder, head shoulder that he's got highlighted and a neckline that we are trying to break through. And we've got the trend line coming across here. So we could break through all that resistance and hopefully move to a land much higher and farther away from where we are today in terms of pricing. James E. Thorne, he says, yen carry trade on wine coming to an end. Global liquidity is increasing. Global reflation trade stands in front of investors. Invest wisely. Keep it simple. And this is what he shows here for the M2 money supply coming down. And now we're turning back up in 2024 and whatnot. During this time frame, though, they did have the reverse repo that was leaking money back into the system. I will say that. We've got the Dow to gold ratio appears to be breaking down. Further confirmation would be a big boost for gold investors. So that occurred here in 1967. In 1967, and I just want to make sure all of you commodity guys, which I am, understand this. We could have saw this break the trend line here, and I would have been purchasing in 67, 68, 69, 70. You had to wait a few years for this to materialize. If you had purchased in this area, it gave you a long time to load up in probably the best companies and sectors, and you could get your pick of the litter here. And then if you held it through this entire move, oh my God, you would have made so much money. So much money from top to bottom. We're doing something very similar to the 1970s. It started in 1990s. We peaked out here for a gold bottom in 2000, 99, 2000. And then we came down. We've been coming down. That was the last commodity bull market from 2000 to 2011. We had a slight move higher. We consolidated and we've broken through that trend line, support line here. If we get to this level where he's got this circle down here, oh my goodness, guys, you would have made so much purchasing power gains. It's unbelievable playing precious metals and commodities. So what he says here is below the dotted black line, confidence increases substantially that this is going to occur. If this is a bear flag and it breaks below its support line, we have a strong piece of evidence to support a very large move up for precious metals into the end of this decade. And this is a inverted flag pattern, is what I'm seeing. He says, is it possible that the Dow to gold ratio could fall to less than 1? Can the dollar price of gold be larger than the Dow? Currently, gold is at 2,400 and the Dow is over 38,000. So it could be possible that the Dow goes down and gold goes up, and gold becomes more expensive than the Dow. And I know that's really hard to make sense of, but it's done it in history when we got to a one-to-one relationship in 1980. I think something like that could occur again. Man, this is a huge opportunity here. GDX for the miners. So going off of gold about to outperform the S&P 500, we're also seeing very good setups and potential breakout points in GDX here, looking ready to rip. We've got all these areas of where he thinks that we might go. But guys, if we get this breakdown, you're going to see a huge money flow into GDX, the miners, GDXJ, and all those ETFs and mining companies. Absolute wonderful opportunity here. Stay positive is what I'm going to say. Stay positive on these sectors that are making progress on breaking against the other financial sectors. Here's oil, another one from Sahara. So tap my red box target, a good low risk entry point here, which aligned with the lower coil line where it turned and now has a biweekly hammer candle that brings us back inside the bull. That was that carry trade punching us out of the bull for a little bit. And depending on the weekly, I think this is weekly or monthly that he's got on here. Hopefully we can stay within it and work our way on up eventually. Coming out of this bull, that would be a fun ride all the way up to the $120, $130 range for oil. And I think eventually, and I don't know the path, but I think eventually towards the end of this bull market in late 2020s, we're going to $500 a barrel. And other people, what they do is they'll look at this move here and they'll be like, "Oh, you're wrong." It's like, how can you say I'm wrong on a call that is late 2020s at the end of the bull market? And we're in a super cycle. We're at the beginning of it, and that's where you get your evidence is here. If they're dismissing all of this evidence, they're saying, "Oh, no, 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 this is all going to go up. It's totally not going to happen," and then they'll explain it away with narrative like, "How could people afford oil at $500 a barrel?" I'm like, I don't know. I mean, what if oil is really short in the world, and what if we created a lot of currency on top of it? combination of two things. It's not just one thing. Here's Grady. He says he thinks many established correlations will change with what's coming. Also think there's way too many macro parameters nowadays for much of traditional macro analysis to be consistent. It means, for example, firms using mainly algos, regression, and old correlations will start to mislead clients. And institutions still have the old 60-40 stock bond weighting is a misconduct today. And he's just showing the divergence between bonds and gold prices. And this is where we've entered a new regime, where gold's been going up with interest rates going up. And that's what I'll say there. This one big divergence, and the correlation is broken. Cross-border capital, snapshot of latest end July central bank liquidity. Spoiler alert, it's looking better. So we've had negative declining liquidity here back in 2022. That's when gold bottomed, was in here. And then looking forward, we can see it's turning green for liquidity. So liquidity is coming into the system, and maybe we see higher prices potentially. Another one from Grady, which is silver, and you love the cup and handle, but let's see what he has to say. The next monetary system will come from the BRICS plus East South. And what does the East have a much longer relationship with than the West does? And what does East really like more than the West? Yes, silver. First, red marked bull move started right after Nixon ended the gold standard back in 1971. The second bull move was the bull market of the 2000s. The third and final bull move has started, and it will kill the present monetary system. So this is your last chance to leverage this precious metals bull market. And do realize that your future life actually does depend upon making the most out of this last precious metals bull market. Also, this conclusion gives that it is absolutely vital to get the best guidance. So here's the silver quarterly chart, the three, bull 1, bull 2, and bull 3 coming. The Kondratyov wave. And again, if it's right translated, we top beyond, which would be very reasonable for this bull market. That was also where I think oil will top out at some point. And then he says, and if we top in 2034, if the fifth K wave is similar to the fourth K wave, it's going to be a little bit further into the future. The price target, he has $370 for silver per ounce. It says could go much higher briefly at the end of the bull market if there's a panic into it. So there's his opinions there. This is for GDX, GLD, gold, and GDXJ. So accumulation cylinder, this is the Livermore accumulation cylinder, 1, 2, 3, 4, 5, 6, 7. And he's charting this out here where it's 1, 2, 3, 4, 5, 6, 7 potentially. And maybe we get a move higher. We'll see. And this is on VanEck GDX chart ETF. The breakdown, a breakout. So this is the risk on index is breaking lower, and the risk off index is breaking higher. Do we have a slowdown that's coming? What makes the risk on index is copper, high yield bonds, Aussie dollar, semiconductors, high beta. In the bottom here that's breaking to the upside, this represents gold, US Treasury bonds, yen, utilities, and staples is what we've got there. The Bank of America card spending per household fell 0.4% year over year in July compared to 0.5% year over year decline in June. So there's a little bit less spending going on with credit card and debit card spending versus history. You can see the big impulse move with all that stimulus money way up, and people were cooped up, and we've slowly been coming down in credit card spending to the zero line, which means we're not growing. Do yourself a favor and spend 30 seconds looking at this chart and then ask yourself how likely it is that the unemployment rate will just move sideways from here. And every single time in history that this unemployment rate has come up, we've had a recession or slowdown, and it's coming up right now. Probably pretty unlikely, what I will say. The S&P 500, in the past, the S&P 500 has typically shown strong performance over the next 12 months when the VIX rises above 2 standard deviations. So if you get the VIX to go up, which it did, looking forward, these have been the returns for the S&P 500, and 12 months after, we've had pretty good returns. Actually, very good in terms of percentage returns. Here's another one. The U.S. manufacturing sector is currently experiencing its second longest downturn in modern history, attributed to various factors, including elevated interest rates that have suppressed demand. So it's been the second longest manufacturing recession in history, and that's that big area under the curve here on the right. And that's number of months underneath 50, which is a kind of the medium. It's not growth or contraction, which is 50. Here is, I believe that high yield spreads will start to catch up with unemployment level, which means we are not done with volatility in his opinion, and that this could go up and volatility could go up and unemployment go up all together. Here is Tavi. He says gold is likely leading commodity prices in a significant way. It's worth noting that this is happening while hedge funds are currently very bearish on commodities, which often indicates we might be nearing a major inflection point in these assets. Not to jump too far ahead, but the inflationary implications of such a move could put the Fed in a tough spot in the coming months. This kind of pressure a stagflationary environment can create. And here is the commodity sector, and then gold leads it. Gold's already ripped to the upside, and you can see commodities generally follow behind it, and it hasn't followed yet. So we could very well see commodities rip to the upside here. And that's what we've got for today, guys. So we're going to end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. We still have Mayday coupon code. We've got a question and answer session coming up on Sunday at 5 p.m. And I'll see you guys there. So that's all I've got for today. We'll catch you next time. This is Finding Value.